Maybe a little bit about myself first before I bore you with more slides about financial inclusion and fintech. I grew up here. I went to school here. And then many years ago, I started my career as a community organizer, working with communities in the rural parts of the Philippines. Some exciting areas like Aurora, Negros Occidental, Davao del Norte. At that time, they were all insurgency-ridden, so it was an exciting time for me to be working with farmers and fisherfolk groups at the time. But of course, I had to start earning a living to raise a family, so I ended up number one, first going to graduate school in the United States, was able to get into Harvard Business School, and then from there, I joined JP Morgan as an investment banker and also did some private equity with some, for a fund that was, we were basically running money for Soros Fund Management and the Bass Brothers of Texas. But I've always wanted to figure out how to sort of combine my experience working with communities and my experience in finance and also my experience in technology into something that would actually make a lot of money, not just for myself, but also for my investors, but also make a difference in the lives of hopefully millions or hundreds of millions of people. So sometime in 2009, 2010, I had this crazy idea to start a fintech company. At the time, there were no mobile devices, no smartphones. The internet was kind of just getting started in the Philippines, so it seemed like a crazy idea then. So I'll tell you a little bit more about the Ayannah story, and you let me know whether it's still a crazy idea. So, Jomar, can you, I'll start out with a little video. It's actually available on our website, but for a lot of people here, maybe you haven't seen it. It's about Ayannah. So just promising to make this more interactive and entertaining. Jomar, can you?
In 2009, the world's middle class was 1.8 billion people. By 2020, the world's middle class is expected to grow to 3.2 billion people. Most of them will be in emerging markets. However, 2 billion of them remain unbanked. The Philippines is one of the fastest growing emerging markets. Starting here, Ayannah aims to provide a full stack of digital financial services to the emerging middle class. Sender is a digital commerce service enabling migrants to send directed remittances to their loved ones in the Philippines, and soon, in other emerging markets. Sender has built a loyal and growing customer base by giving migrants better ways to support their families in their home countries. Sender is truly the better way to send. Sender Direct is an award-winning software as a service that allows any organization, even individuals, to sell mobile top-ups, accept payments for microinsurance, bills and online purchases, and accept top-ups into or pay out cash from any stored value system. Through Sender Direct, we have served over 10 million unique customers. That's 10% of the Philippines' population. Sender Remit is a bank-grade software as a service that allows interoperable international and domestic remittance transactions across different networks. Together, Sender Direct and Sender Remit will be the largest digital payment network in the Philippines. This is the perfect platform to provide a full stack of digital financial services. From payments, commerce and analytics, we will spur financial inclusion. Using recently declassified technologies developed by the United States Intelligence Services to fight terrorism, we are launching the first risk-based credit scoring system for the unbanked. We will analyze data from various sources, such as mobile top-ups, remittance transactions, bills payment, social media, and loyalty programs, using deep learning artificial intelligence to provide accessible and affordable financial services to the rapidly growing but unbanked customers in emerging markets. Join us to meet the needs and aspirations of the next 2 billion people in the world's emerging middle class. Ayannah.
Okay, thank you. So a lot of people ask me what does Ayannah mean. So for the locals, probably you kind of figured it out, right? But for the people, the foreigners in the room, Ayannah, what happened was when we started the company, to rank high on Google, you have to have a very short URL with a .com, and we were thinking, how do you get a short URL, less than 4 syllables, and to have a .com so that you rank high on Google? And we figured, let's use Ayannah, and one of our first angel investors, a British guy who's a partner at Greylock, and I told him, hey, we're renaming the company Ayannah, and he said, oh, I like the name. I can even pronounce it. So this is a Cambridge-educated British guy. So and for the foreigners, it means Ayannah means it's there. So when you give something to somebody, you'll say Ayannah. So if someone asks you for money and you give the money, you say Ayannah. So that's the reason. But it's also good because sometimes when we call on companies and on the phone, they think we're from Ayala. So it also helps us doors open. So Jean-Francois, we kind of that helps us out. Okay, so let me tell you a little bit more about what we're doing. Let's see. Okay, so we start in the Philippines. A lot of this stuff probably has been discussed, but we provide affordable, accessible digital financial services for the emerging middle class. Digital, meaning we have no brick and mortar, no physical presence. Everything's driven or is provided via software on the web or on a mobile browser or a mobile app. Philippines, fastest growing economy, very young population, 23.5. So basically half of the country was born after 1993. So think about that. So that's actually a very important stat, especially for those people who are trying to find new markets for growth. Again, over the past few years, there was a decrease in poverty, meaning an emerging middle class. But while there is an emerging middle class, most still people transact over the counter in cash. So 96% of the transactions in the economy are in cash, and actually 99% of consumer transactions are in cash. 87%, there are, I think, if I'm not mistaken, over 30 million already ATM cards that have been issued, but most of those ATM cards are empty, or as soon as it's loaded, people withdraw the money. So 87% of the population remains unbanked or have no bank deposits. What's interesting is we have, as a lot of people know, that we have a huge remittance flow from overseas, from 12 million overseas Filipinos. I just recently updated this slide. In 2016, it was 27 billion. Last year, we set an all-time record of 31 billion of inbound remittance from 12 million Filipinos overseas. Last December it grew 7% month on month. So with the peso devaluing, we expect that the remittance flows will continue to be strong. But what's very interesting for us, and a lot of people from overseas don't really see, is within the Philippines, there's an even larger domestic remittance flow of roughly $40 billion or even more. And that's because roughly half of the population, over 40 million people, have moved to the cities. There's roughly a dozen big cities in the Philippines, from 1,400 towns, that's 1,400 towns, and 42,000 barangays or villages. So 40 million people live in the cities, but they send money back to their families or beneficiaries in the countryside to the tune of at least $40 billion. That stat came from the Gates Foundation and Omidyar Networks. So again, that's a Forbes infographic. 87% have no bank deposits, 96% of transactions still in cash. And as people have said, banks are not willing, are not able to reach down to the middle or the bottom of the pyramid. That's partly because we have a very prudently run banking system. We have one of the most prudent central banks, and they actually have a well-defined regulatory framework for banks. For those of you who are not old enough, there was once upon a time the Philippines defaulted on its sovereign debt in the early 90s. And because of that, we were under IMF supervision for at least 20 years. And because of that, our bank managers and our central bank is actually very fiscally prudent. And that cuts both ways. In many ways, it keeps our banking system healthy. There's no over leverage, or at least everything's very solvent. Our banks are very healthy and profitable, but at the same time, it prevents banks from actually reaching out to the vast majority of the population. For example, my understanding is for a commercial bank, just before June 2017, if you were a commercial bank and you wanted to set up a branch in a town, you would need at least $500,000 of deposits to comply with the central bank regulations. Maybe some of the bankers here can actually correct me if I'm wrong, and you would have to have around 200 square meters of floor area, a safe that will comply with the central bank requirement. And so for a lot of banks, it doesn't make sense to expand to the middle or to the bottom of the pyramid, particularly in the rural areas. So most of the banks and the ATMs are still clustered or are crowding in the cities. Again, more stats. This is courtesy of Lito Villanueva, by the way, of Voyager and FinTech. 69% of the population, no access to financial services. Average transportation cost is 90 US cents to get to a financial touch point. It takes 21 minutes to get a financial touch point, and only 1% of consumer transactions are electronic. 99% remains cash, over the counter, in one form or another. Okay, so what we're focusing on is how everyone's trying to spur financial inclusion in a cash economy. So what we've focused on is remittance, insurance, and credit scoring. Now, the reality is e-wallet adoption is still very low, in spite, of course, of the very noble efforts of our friends in, let's say, Paymaya or True Money or Mint. The e-wallet adoption still remains slow. And you still need a merchant or an agent network to provide the cash in and the cash out facility so that people can actually put cash into digital or stored value and take cash out of stored value. So a lot of the people remain unbanked but economically active. And so the first problem that we wanted to solve was the problem of sending cash in a cash economy. So 80% of remittance transactions are picked up in cash. Only 20% are credited to an account. And that basically makes cash remittances very expensive and inconvenient. So mostly for the beneficiary. Most of them come from the villages or the small towns. So what normally happens is the sender, either the sender is in the Middle East or here in Manila, they'll send the money through a remittance agent, and the beneficiary will go from the village to the town to pick up the cash. But what's happening is there's an industry-wide problem of cash availability. So some of these agent networks are huge, very liquid, but when you have 2,000 branches and you're trying to maintain at least $5,000 or 250,000 pesos per branch, what happens is, let's say on a heavy withdrawal day or a heavy claim day, let's say it's the 15th or the 30th of the month, payday in Saudi Arabia, Hong Kong, Manila, and then many of the migrant families are from the same town. Let's say in Batangas, there's a town called Mabini. A lot of the migrant workers abroad come from this town. So let's say if you went from, let's say, your little barangay, you rode a tricycle, spent money to go to the center of town, and then when you get to the remittance agent, they'll say, sorry, we're out of cash because everyone has withdrawn all our cash. So it's a big problem across the industry. It was a chronic problem. And of course, it's a really horrible user experience for the beneficiary, and it's actually a constraint also for greater business for the remittance networks. So our solution was to create an interoperable agent-based network. What we did was, instead of competing with the existing incumbent remittance networks, we decided to work with them. They actually came to us and said, what if we allow interoperability so that, let's say, the money came from, let's say, company A, but the company A branch, either they don't have a branch or the branch that they have in the little town has no cash, the beneficiary can pick it up in company B. So that's basically, it's actually a very simple idea, but you have to understand these companies are competitors, so they never really wanted to work with one another. So it took sort of a neutral party like Ayannah to actually get them to work together. So what we did was we of the 5 major remittance networks, 4 have decided to join our interoperable network. And then there's like a dozen smaller remittance networks, and many of those are also deciding to join our network. So what we're doing is we're helping the incumbents, the big guys, as well as the new or the small players with interoperability. And also we're giving retailers or individuals additional income. I'll tell you more about that. So how are we doing it? So we launched in 2015, we launched a software called Send and Remit, and we would like to think it's the industry standard software as a service for interoperable cash remittance. So basically, it's something that it's BSP compliant, and it's being used now by 4 out of the 5 big remittance companies, so that allows them to actually transact with one another. So we take care of the clearing. So in effect, we're like becoming the RTGS or the interbank funds transfer, but we don't work with the banks, we work with the remittance companies. Also, we have another service called Send the Direct. It's another software as a service. It's actually been running since 2011. And basically now it allows any individual or any organization, a retail organization, to enter the payment industry. And it's being used now by some of the major retailers in the country. Okay, so you guys are all familiar with Grab, right? So I'm not endorsing Grab, but basically our strategy is very similar to the Grab strategy. So what we're building actually is what we believe will become if it's not already, is the largest digital transaction network in the Philippines. So we can now actually pay out cash for any of our foreign partners. So if you notice, there's a yen, dollar, crypto, a Bitcoin, and a euro sign there. So we're working with our foreign remittance partners from all over the world so that they can pay out cash. So you'll be surprised, there are Filipinos everywhere. We were pleasantly surprised that we have a partner in Finland. And apparently there's a lot of Filipinos in Finland, and the volume is actually quite substantial. We have transactions coming from Malta, Gibraltar, the Cook Islands. Sometimes we have to Google where those places are, but that's how widespread our Filipino diaspora is. Also, domestically, we allow now interoperable transaction between all the different remittance networks, and with Send the Direct now, anybody can become a payment. So if you know at Grab Taxi, they started working with the incumbent, the taxi operators. So they help the taxi operators get more passengers through the app, right? In the same manner, with Send and Remit, we're helping the incumbents get more transactions by fulfilling it through interoperability. At the same time, we follow the Grab car model and with Send the Direct. And we enable now any individual or a retail chain to provide the transaction services. So if you notice, our partners for Send the Remit are mostly the big pawn shop and remittance chains, while our partners for Send the Direct are the retailers who are not yet in the remittance industry but want to enter the remittance industry. So the 2 largest drugstore chains, Southstar and the Generics Pharmacy, are starting to use Send the Direct. And right now, 4 out of the 5 major remittance companies are using Send the Remit. Please change slide, please. So these are our partners. I don't have to tell you who they are. I think you guys know these guys. So what we do is we're trying our best to be friendly to all. So for the people here who are local, we call this strategy our Dolphy strategy. So I don't know if you know who Dolphy is. He was a comedian and basically had a lot of wives and girlfriends. But when he died, all his wives and girlfriends were all there and everyone was friendly with one another. So the same vein, we want to be friendly with everyone, including all our wives or our partners, and whether they're so that's the idea. Or to use a quotation from the late great warrior Alexander the Great. He said, "We should conduct ourselves so that all men wish to be our friend, and no one wants to be our enemy." So that's our goal, is to be a neutral party for everyone, whether it's Mint, Paymaya, True Money, Coins, or whoever else wants to enter the Philippines. We want to become a partner for them to find new customers, etc. Domestically, we work with the drugstore chains, the generics pharmacies, Southstar being the two big ones. We also are working with the rural banks and the consumer finance companies. Next slide, please. So as I mentioned, we're building out interoperable transaction network. Next slide. And that's our traction. So we've been growing, very limited capital, but we're proud to say that an all-Filipino team is making this happen with very limited capital. We just have raised $5 million, which is a drop in the bucket in the fintech world. Next slide, please. So we're partnering with a new agent network called Panalo Express. It's a bunch of entrepreneurs from the provinces who wanted to enter the remittance industry, but they didn't have a technology stack. So we're giving her a stack, both the infrastructure and the app, so that they can use it on a private label basis. Next slide, please. So also the Araneta Center for the foreigners here. This is like the Shinjuku of Manila. It's one of the largest transportation and retail hubs in the metropolis. 1.2 million people go through this center every day. And within the Araneta Center complex, there's 20,000 BPO workers. So the Araneta Group has asked us to launch Senda Direct through Panalo Express in the Araneta Center, hopefully by the second quarter of this year. Next slide, please. We're working with LBC, which is the largest. It's a listed TPL, our courier company. So they're launching a product with us with Smart Padala. Next slide, please. Again, the generics pharmacy, 2,000 branches. They've agreed to roll out our payment system in their 2,000 branches. That's going to take probably a year to do. It's going to take time. Next slide, please. So interestingly enough, Western Union has agreed to partner with us as a payout network. Traditionally, Western Union insists on exclusivity, meaning if we pay out for them, we cannot pay out for anyone else. We cannot pay out for MoneyGram or any other foreign remittance company. But for us, they made an exception. So they will allow us to continue paying out for MoneyGram, which is actually owned now by Alipay, but they will also pay out through us. So I think it's an indication that we're actually making a difference in the industry for Western Union to adjust to us rather than us adjusting to Western Union. Next slide, please. And also, what's interesting is, and this has something to do with digitization and wallets, in most emerging markets, e-commerce, the first vertical that really grows is online travel booking. The easiest thing to sell online is a plane ticket, right? You don't have to deliver it. You just have to send a PDF. And the projection is online travel will double by the year 2020 from $500 million to $1 billion. But since there's only 3,000, if not mistaken, 3,000 credit card holders, the two major airlines need a way for people to pay for plane tickets online. So they're rolling out their own debit cards partnering with some of the banks. I think Cebu Pacific is partnering with Union Bank for the debit side and with Citibank for the credit side. And Philippine Airlines is partnering with China Union Pay. Also, Paymaya launched their debit card product, which has an app as well. From what I gather, they've reached over 1 million debit card Paymaya customers. And last November and December, they processed close to 2.5 billion pesos worth of online purchases. 90% was in travel bookings. So they need an agent network like us so that people can put money into their stored value accounts. Next slide, please. So we also partnered with insurers. But this is something very interesting. We met some people from AXA, and AXA is this global insurance company based in France. And we found out that they're moving a lot of their senior management from Paris to Singapore and Hong Kong. And we were wondering, and we met their team when they visited us last year, and they said, insurance companies need. So AXA is one of the market leaders in the mature markets, the developed economies. But these developed economies have very high median age. So I think probably more like 40 or 45 in North Asia, Japan, Korea, or in North America or in Australia, New Zealand. These markets are already mature. And when the population ages, utilization rates go up. People die, people get sick, people start drawing pension, and you need a younger cohort to start paying premiums in order for these insurance companies to remain profitable. So these guys, because they are insurers, know with mathematical certainty that if they do not develop meaningful market share in Southeast Asia, in the next 5 years, their stock price is going to go down because they're not going to find, they need new customers to start paying premiums to stay profitable. So there's a mad rush now. It's not just AXA, even Allianz and all the other insurers. There's a mad rush to what we call VIP, Vietnam, Indonesia, and Philippines. Why? That's 500 million people, all with the median age below 30 and a growing middle class. So they're now building products, and we're helping them build products that can be delivered electronically and very affordable. So the first product we're launching is a health insurance product with AXA that allows someone to pay with 200 pesos a month to have access to hospital income, meaning if you get confined for whatever reason up to 1,000 days, we will pay you the minimum wage. So this is a product, and we're happy to say that we wrote our first policy last December, and it's starting to get traction. It's something that's very popular with OFWs to buy for their families in the Philippines. And because a lot of the beneficiaries of OFWs actually have no access to health insurance. Even if they do with PhilHealth, it's still very minimal. It's not enough to cover the medical expenses. Next slide, please. And this is what the thing that we've been busy with the past few months is we're launching very soon a risk-based credit scoring system that we hope will become the national standard. It's called Kaya Credit. For the foreigners, Kaya means in our language, pag sinabing may kaya, if you say may kaya, someone who has means, someone who can afford. Interestingly enough, in Bahasa Indonesia and in Malaysia, kaya means someone who's rich. So when you say urang kaya, it means a rich man. So our goal is to provide hardworking Filipinos with access to quick and convenient access to personal and small business loans. And we also are going to partner with lenders, again, with our Dolphy strategy, to work with the lenders so that they can find qualified, responsible borrowers. So we want to connect the unbanked but economically active borrowers to lenders. Next slide, please. So we partnered with Bayad Center, which is a subsidiary of Meralco, the electric utility here. They collect around $220 million a month. That's 12 billion pesos monthly of utility bills for Meralco and for 190 other utilities and insurance companies, etc., internet, cable, etc. 90% of those is paid for in cash. So they have a huge customer base paying their bills every month. And so we partnered with them. So what we're doing is analyzing the data from mobile top-ups, from remittance transactions, bills payment, and social media to provide a credit score using the Kaya Credit brand. Next slide, please. So we already have we have the data, and we're now doing the science using machine learning. I think the guys from Tala have already told you about all of this stuff, right? So we're now able to predict demand with a reasonable level of accuracy, and we're soon, hopefully, able to predict repayment behavior. So this is something that we're very excited about. There's nothing like this in the Philippines yet, using alternative data, as our friends from Tala said, to basically to predict someone's loan repayment behavior. Next slide, please. So basically, the goal is to provide instant and continuous underwriting for lenders. When I say instant, to use the phrase of our friend from Mint, 310, within a short period of time, you can actually make a lending decision, and then you can continue underwriting the borrower over time. Because what happens now is, let's say you apply for a credit card or a loan, you're only underwritten at the time of application. But with this system, we will track your behavior over time, and so that the lenders will have access to the most current sort of state of your financial behavior. Next slide, please. So our goal is to hit around 30,000 agents by the end of year 2018, 100,000 insured by the end of year 2018, and 1 million members actually that's Kaya Credit by end of year 2018. Next slide, please. So we're hoping to grow exciting. We're growing in we're planning to open up an office in Jakarta by the middle of the year, and probably in Vietnam by the third quarter of this year. Next slide, please. And just came back from spending 2 weeks in San Francisco with the Google people and met a lot of fintech startups from all over the world. So it's really, as they say, it's a huge unmet need, and we're talking about billions of people here. So the beauty is, every time I talk to people, let's say from Egypt, Nigeria, when I tell them about what we're doing in the Philippines, they're all saying, Mikko, you know what? You can do that in Nigeria too. You can do that in Egypt too. You can do that in Senegal too. So I think this is something that's proudly Filipino-made that could actually be exported and scaled globally. Next slide, please. So last year, we won the Visa FinTech Finals last January 2017. It's very interesting because we were invited to compete in the Singapore semifinals for Southeast Asia. And, I was there with all these very, very smart people. And, I never thought we would win. So since the competition, the pitch presentations was alphabetical, Ayannah was the first to pitch in October 2016 in Singapore. So after pitching, I went back to the hotel thinking we would never win against all these really well-funded and smart startups from in Singapore. And someone called me while I was in the hotel room, say, hey, come back, you won. So we won the semifinals in October 2016 and got us a chance to compete in the World Finals in January 2017 against 24 other startups from all over the world, on fintech startups, and never expected to win, but we won as well. So when we started this business, it's either when you're trying to do something new and innovative and pioneering, either people will either think you're crazy or you're ahead of everyone. So finally, I think people are realizing that we're not as crazy after all. So next slide, please. And this is actually quite flattering for us. The Asian Banker is a very respected trade publication that focuses on the traditional financial services industry in Asia, in APAC. And last year, they gave us an award for Remittance Initiative of the Year, which we never really expected as well. And next slide, please. So we won Startup of the Year last year for the Asian Rice Bowl Award. Next slide, please. But what's very interesting, next slide, please. So last commercial for Ayannah is we were invited to attend the Google Launchpad Accelerator last month. I just came back from San Francisco, spending 2 weeks drinking Google Kool-Aid about machine learning and cloud infrastructure from a Google fire hose. So it was a really great experience, learning from the best in the world. They got startups from all over the world and mentors from all over the world talking about cutting-edge technology for machine learning. So this is something that we're going to apply in our business and hopefully also share with the rest of the industry here. So lastly, so our goal, as I said, is we want to be the Dolphy of the fintech industry. We want to be friend to all. So I'm sure there are a lot of lenders in the room, a lot of consumer finance companies in the room, and maybe even insurance company representatives in the room. So we're here. We're open for partnerships. We wanna help you grow your business. It's a huge market. No need to compete, or at least I think there's a lot of good reason for competition. And just to give you sort of the idea, some of the biggest fintech companies in the world are working with us from places like Russia, China, the Czech Republic, Japan. So you probably know these guys already if you're following the industry. But we also are very excited to be working with some of the smallest rural banks in Bicol, in Surigao. So we want to help everyone, all these lenders and financial service providers, reach new customers, especially those who have who have not had access to financial services to improve their lives. So we have a short video to show you what we're doing. you can replace Grab with anyone else. Thank you very much.